Good evening, ladies and gentlemen. I'm delighted to welcome you to this fundraising masterclass. First of all, I would like to thank Nick Howe from NatWest for hosting us this evening and looking after the hospitality for us as well in these excellent facilities. Would you please just join me in a normal clap to say thank you so much for hosting us. Very generous of them, much appreciated. And we'll be hearing from Nick in a few minutes. So, and then we'll hear from Massey Shams from the IOD Young Executives Forum. We have an outstanding panel for you this evening with 3 investment platforms advisors. And from the other side of the fence, we have 3 entrepreneurs who've raised at least 1 round of funding and survived the COVID challenges, which, as we know, for young businesses were probably unheard of or unprecedented in the impact it had on the businesses. Now, I'm absolutely delighted to hand over to Nick to say a few words of welcome to you. Thank you, Nick.
Thank you, Colin, and a very warm welcome to each and every one of you. Housekeeping, we're not expecting a fire alarm because it's 6:15, so you don't do fire alarms at 6:15. So if one was to go off, then you can see the exits, ideally out the front. Wi-Fi for tonight. NatWest event Wi-Fi pops up. There's no password required, so feel free if you wish to. Tonight is a really good opportunity to come together. I'm always keen for us to see what we can do better. One of the things that I think has been a real kind of change and a real sort of effect for us in the last, certainly the last couple of years, has been lessening the exam sort of scenario when funding requests come in. Too many founders, we'd made it too hard for people in terms of that crux coming in right at the point in time when it was a yes or a no situation. What we've tried to do is intervene and work more earlier in that process, a more consultative approach to try and understand what the aims and the objectives are of the lending request, the investment request, and to signpost accordingly. And one of the things that I think we found work really, really well is partnerships with certain groups and certain organisations that represent different underrepresented communities. So we've very proudly worked with Black Seed, with Hatch Enterprise, and with organisations involved in the Invest in Women's Code, because there's a lot of demographics of founders that actually don't get the funding at the level that other people absolutely would do. And then lastly, we think that actually democratising access to networks is a really important part as well. Some people are really lucky to be plugged into the right people. Some people, that's an effort that takes a long time to build. For others, that just seems like a distant memory and a distant dream. So NatWest has launched Access to Business Expertise, which is effectively a platform that allows anyone to gain access to the support that they need to help them solve and overcome that barrier that's keeping them awake at night. So it's a free service, whether it's a marketing problem, a legal problem, a funding question that you might have. Even if you're up in Grimsby and you've got no network, no sort of knowledge of where to go to, who to go to, there is that there is that opportunity to garner that support. So, please do feel free to look that up, NatWest Access to Business Expertise. Really looking forward to the stellar lineup that we've got this evening, and enjoy the evening, and look forward to chatting to more of you later. So, thanks, Colin.
Thank you. And now I'm delighted to introduce Massey Shams from the IOD Young Executives Forum to say just a few words of welcome. Massey.
Hi everyone, thank you so much for joining us, and thank you Colin and the team for such an amazing event. I represent the Young Executive Committee at the IOD. We relaunched in 2020. Our mission is to help those at the beginning of their journey to become board members, and we're also creating a diverse talent pipeline to promote the power of storytelling among our members and to help them to have the self-confidence, to build that self-confidence, to reach out to other executives. Please come and talk to me if you have any questions about the IOD and different special interest groups, and thank you.
My pleasure. Thank you very much, Matty. And if I could have Angelique's slide presentation, please. Thank you very much. Now I'd like to introduce Angelique to say a few words about FSC Capital. Would you like to come up? Oh, you can do it from there if you like.
Yeah, I have mic, and it works. Okay, perfect. And that's my, okay. Should I stand or should I sit? What, I don't know.
I think stand might be easier.
I will stand up, okay. I haven't done it for a while because we had such a big break and then everything went online. So it feels like something new again. But anyway, I would like to introduce SFC Capital. I'm Chief Operating Officer at SFC Capital, and we are one of the leading, if not the leading, pre-seed and seed investor in the UK. This is me and our team. And when I said we were leading, it's not me saying it. It was actually PitchBook in a number of their global league tables where they count everyone how much they invested, where and when. So we were on the top at least 3 times, I think. We won a lot of awards, so I think that just to give you a little bit information and validation that hopefully I can help you a little bit today. We have made over 360 investments in single companies, in unique companies, but many more, multiple investments in a few companies that did very well. So some of them that you can see, we are sector agnostic, which means we invest in businesses coming from different sectors. That diversification is really what we care about for our investors as well. That helps us to mitigate risks. As you can imagine, putting all your eggs into the one basket is not the right strategy, not at early stages where a lot of companies unfortunately fail. So we invested across very, very different companies, from software through fintech to life science and many more. Most of them did very well in these few categories that actually are categories that we score in our review system. So as we start speaking to entrepreneurs, we do the very first screening, and then when they do well with that, we go through a number of questions related to those. How many? 5 categories. People is the most important. So I actually put the scoring, how much, what's the maximum that you could get, and people is almost half of that. So it's really, really important, and that's what we are particularly looking for. So I don't want to take too much of our time. I'm sure that we'll cover a lot of this, so I guess I will...
Thank you very much.
Yeah, move
All right,
to...
that's lovely. No, that's right.
I have no slides.
Let me
Okay.
have that back.
I
Okay,
had slides.
thank you. If
very
we can
much.
move on to the next slide, please. That's lovely. Paddy, could I invite you to say a few words about Mission Ventures? And I have to say, Paddy comes from the background of building a baby food brand, raising 3.75 million and exiting for 10 million. So absolutely returned a lot of value back to the investors and, of course, to the founders. Paddy.
Thank you, Colin. Yes, so my name is Paddy Willis. I'm sitting here this evening as co-founder and exec chairman of Mission Ventures. Spoiler alert here, Mission Ventures is not a fund. We're not a VC, although we have ventures in the name. So, but we are a team of exited entrepreneurs from the food industry and brand building experts from FMCG who are working with the next generation of founders in the food and drink space to make the UK food system healthier, fairer and more sustainable. We work in partnership with other larger organizations who are seeking to have impact. So our biggest program currently is funded by a part of the Guy's and St Thomas's Foundation. It's around health, specifically around childhood obesity. It's a second program we're running with them, and it's designed to democratize access to healthier food. You're 3 times more likely to leave primary school obese if you're in a poor neighborhood than you are in a wealthier neighborhood. We have a diversity program called Thrive with Sainsbury's, which surprisingly with Sainsbury's, in partnership with Foundervine, which is a black-led organization supporting black entrepreneurs. And that's about trying to get more black founder businesses into the Sainsbury's supply chain. So that's a program an accelerator program underway at the moment. And we are partnered with Warburton's, the Bakers, which is actually the UK's most purchased food brand, on investing in, so we have a corporate venturing partnership with them to invest in interesting businesses that sit outside of their core areas of activity, but where we think there's an opportunity to build up the business and the brand, with the idea that it might eventually be acquired by Warburton's, if not by somebody else. As Colin's alluded to, back in 2004, my then wife had the idea for a baby food business, which we worked on and eventually launched after much blood, sweat and tears, including 18 months to find a manufacturer after Sainsbury's already said yes, to launch Plum Baby, which was then sold in year 5, which had always been our intention. But as Colin said, I'm the guy who did the business plan, read all the books, read all the articles, which said whatever the number is, it's never enough, double it, add something else for a contingency. I said 400,000. So we went out and raised 400,000. We then launched, and within 18 months of launch, we'd raised 3.75 million because I was wrong. So that's CPG for you, consumer product goods. They're very, very working capital heavy. So I now sit basically working as a mentor with a number of different businesses and different programs, and also through the company of entrepreneurs. And one of my passions is trying to help inspire the next generation through talking to students about what entrepreneurship is about, and giving, to Nick's point about horizons and networks, giving more people the opportunity to understand the world of work and the opportunities that entrepreneurship provides. And that's me, I suppose.
Lovely. Thank you. And now I'd like to introduce, and if I could have the slide set for Ivan from Newable, please.
Thank you very much.
And Newable are one of the larger funders and funding platforms for entrepreneurs, and offer not only a funding platform, but also a range of other services to support entrepreneurs. So over to you, Ivan. Thank you.
Thank you very much, guys. And I think it's not going to be quite as slick as the FSC pitch, but I'll do my best. I've been investment manager at Newable Ventures for about just under 4 years now. So as Colin mentioned, Newable, the fund is actually idiosyncratic. In fact, it's a fund within a much wider company. So the wider company employs about 300 to 400 people and offers 3 main things, being money, advice, and workspace. Workspace being a number of business parks up down the UK, and we actually acquired a company called Citybase, which works on a sort of WeWork model. Advice, we have big inroads with Innovate UK, UKRI, and a few other services, so we're very much into that sort of grant area. And then money, historically, this has been more sort of microfinancing, debt financing, asset financing, etc. And this is where sort of Newable Ventures came in. So they were looking for an equity offering and acquired us back in 2017. I'm not going to run over, there's quite a lot of text here, but we are very lucky to have a very strong investment committee. Our chairman sits on the board of the Turing Institute, which is the leading AI institute in the UK, and another member set up the UK BAA, UK Business Angels Association. So good pedigree there, and we've a lot of expertise within the team. And yes, as I said, we were formerly known as the London Business Angels and were acquired by Newable. And we think these kind of extra services also help what we can do as an equity platform. I thought it would be useful just to go through our criteria and what we kind of look for. So in terms of the investments we do, we look into what we call IP-rich companies, so mid to deep tech opportunities. And although they're pretty poor quality, we're sector agnostic, but what we sort of look into is what they call the fourth industrial revolution. So where you're seeing, the physical, digital, and biological worlds colliding to create stuff that, every buzzword under the sun, but IoT, AR, fintech, all of that kind of stuff, as long as there is some kind of intellectual property, either patents or trade secrets, etc. We call ourselves a post-seed to pre-Series A fund. I think there's a lot of funds out there which are in that ideation phase, and a lot of Series A funds who sit once you've made product market fit, you're making £1 million a year. And we think that, especially in the deep tech space, there is quite a lot of space missing to refund this. So we're in that stage where companies are showing early evidence of product market fit, but very much at the sort of embryonic stage, but not just looking to fund for product development. We're B2B exclusively, and in terms of the kind of remits we go into, we're in rounds of about 500k to 2 million. And as I said, we're EIS. And then I thought, just to localize it even a bit more, I'd give an example investee company. So this is a company called QLM that we invested into a number of times. So when we first invested, This is a company using quantum technology and LiDAR, which is a sort of light form of radar, to basically measure and accurately record methane emissions or greenhouse gas emissions in real time. Huge amount of regulation going into this space, but also, these energy super majors are losing quite a lot of money as well, so they're picking this up, and I think that the headwinds are moving. We saw this company when it was sort of at very early volume sales with a big energy super major, and sort of we looked into it and sold, and as I said, technology readiness, this was being sold out into market. Obviously, given the technology, there's a huge amount of patents behind this, but also the algorithms and know-how. We just thought they had enough defensibility and did a lot of competitive reasoning around this. And then, so they raised 1 million out of 4.5 million, which sat within our sort of wheelhouse, and we invested about 300 to 400k into that. Thank you.
Fantastic. Thank you very much, Ivan. And now I would like to switch to the other side of the fence and our entrepreneurs. And first of all, I'd like to introduce Lara from ImproveWell, who are improving patient care in 4 countries and many installations. And if I could have Lara's slides up, please. ImproveWell.
Thank you,
That's
Colin.
it.
Yeah, I'm good to go. Hi, everyone. I'm Lara Mott. I'm the CEO and co-founder of ImproveWell. We set up ImproveWell in 2016 with a mission to harness the innovation across a workforce of 1.7 million people in the NHS, the world's 5th largest employer, to improve the way that care is delivered. Over that time, we've obviously lived through a pandemic, which was obviously not what any of us expected. I didn't quite know how that was going to go. But we were very pleased to be in a position to help. We supported the Nightingale facilities, essentially gathering real-time feedback from anyone working on the front line. The tool itself has got 3 feedback systems, so you can share improvement ideas, track workforce sentiment, and send surveys. And I'm really pleased to say that we've scaled the software across the NHS. We're in the US, we're in Canada, we're in New Zealand, and we've recently won 2 national awards for that work. So quite astonishing to be here today presenting this slide, but very proud and owe it all to my fantastic NHS partners for believing in us and coming to us when they needed to during the pandemic. I wanted to just give you a little bit of background about me, which hopefully will help the Q&A session. I studied pharmacology at university, and I guess a vocational degree would have been, or a vocational job after that would have been working in Pfizer. But I actually ended up, these are just a few of my jobs, so I ended up in finance as an analyst, which I didn't find much healthcare there actually at the time. So I landed a job in the healthcare team at FTI Consulting. That's really where I cut my teeth and learnt my trade. So I would say I have helped CEOs, CFOs, board of directors grow their businesses, mainly in the biotech and pharma space. And then my forever job, so I thought, was Director of Investor Relations for GHO Capital, which is a healthcare private equity firm that got founded probably in 2014-ish. So I helped them raise their fund and then also worked with the portfolio companies. I co-founded ImproveWell with a school friend of mine who's a clinician, and here we are 6 years on. So just to give you a little bit of background in terms of our investment journey, we raised our first round in probably 2018, and that was a mixture of SEIS and EIS. We're backed by the Angels Den SEIS fund, high net worth and entrepreneurs, and that was really to rebuild our technology platform. We then were about to close our 600k round right before the pandemic, which was to invest in sales and marketing. We had to pause that when lockdown was announced, hunkered down to really just survive, and really then opened up the round about 4 months later when we knew we were going to be okay. And that was a mixture of angels. We did some crowdsourcing, which was interesting, some small funds, and that was really to ramp up sales and marketing. So today we're currently self-funded and profitable, so any future rounds would really be to expedite growth in either new countries or different industry verticals, that kind of thing. So hopefully I'll be able to bring an interesting perspective to today's discussion.
Fantastic, thanks Lara. And if you can just hand the clicker on to Brad. And if I could ask you for booked it, right, your slides are up. So I'd like to introduce Brad from Booked It, who's driving footfall and spend in the hospitality and leisure industry here and in the US. And he survived COVID when none of his clients were allowed to have any customers coming in. How he did it, I have no idea, but hopefully he's going to give us some insight into that. The floor is yours. Thanks, Brad.
Thank you. Hi, everyone. I'm Brad, CEO and co-founder of Booked It. Booked It is a customer acquisition experience and retention platform for businesses that operate in leisure, hospitality and entertainment. For us, as Colin said, it's all about driving footfall through the door for those types of businesses. We focus on transactional bookings, so currently doing around £24 million in annualised gross sales. Our actual revenue on that is around £2 million, and then we take a margin on that, which is our commission. So there's 3 areas of our business. On one side, we have Booked It, which represents 90% of our revenue, and that is B2B SaaS, and that's all about the solutions that we offer to those types of businesses. In the middle, we have our marketplaces. We have Licklist, which is a marketplace for nightlife events and festivals. We then have Booktivity, which is a marketplace for activity-based businesses. And we have Party Hard Travel, which is a marketplace for party holidays. And we really use the marketplaces as a way to drive footfall to our B2B clients. And then the third area of the business is the marketing and data side. So across our marketplaces, we've amassed a community of over 1.4 million users. We have 1,200 photographers and 1,500 micro-influencers that we use, again, to drive footfall to our B2B clients. So for our B2B perspective, although it drives 90% of our revenue, and at core we are a technology business, we use the marketplaces and the data to not only offer the technology, but also an audience and to get people through the door. So, like I say, the core of our business is Booked It, which is B2B SaaS, where obviously the name is Booked It, and at core we are a booking system, but we offer a number of different solutions around that, from ticketing, loyalty, a CRM, marketing tools, and we focus on 3 core metrics that we offer to these businesses, and that is increasing bookings, and on average we do that by 19%, focusing on increasing spend per head, which we do by 13%, and increasing dwell time, which at the moment is on average 22 minutes. So our real USP is the versatility in the system. So typically booking systems can be configured 2, 3 or 4 ways. We have over 50 different ways that the system can be configured. So we work with a whole range of businesses from events, clubs and festivals, through to bowling alleys, kids' play centres, race courses, travel businesses. Essentially any business that requires a booking system we can cater for. We've had a lot of growth, particularly over the last couple of years. So obviously COVID was, as Colin said, a lot of our businesses, a lot of our clients weren't open. So although in the short term had a quite a negative impact, longer term, the demand for booking systems was never higher. So we've had a lot of growth over the last couple of years, as you can see from here. From investment perspective, we've raised just over 800k from angel investors so far. And we've also recently raised 500k in debt as well, and currently on the PwC raise program to raise our first institutional round of investment.
Fantastic. If you could just you don't need that, but that's okay. Just hang on to it for the moment. And right, lovely. And we have your logo up, and I'm delighted to introduce, last but no means least, Sydney from Loop Not Luck, who's improving social mobility across the UK. The floor is yours, Sydney.
Thanks, Colin. I got that email from PwC the other day. I thought I'd take this time to just tell you a little bit about my background, introduce Loop Not Luck, and I guess give you an idea of what the fundraising journey was like. So I grew up in Peckham, South London, pre-gentrification, and have a white mum and a black father who's from Sierra Leonean and Jamaican descent. So I've always diversity's always been part of my life. Like South London's a very diverse place to live, for any of you that live there. And have always been quite entrepreneurial. So when I was 11 years old, I put in my application to go on to Dragon's Den, as we do at 11. And they actually did a kids version of Dragon's Den where it was like a children needs special where kids kind of go on and pitch to the dragons. And long story short, Peter Jones invested in my first company at 11 years old. So when we were raising this round, it was just kind of like a running joke that I was like, I'm a previously funded founder. And that was my first kind of experience with entrepreneurship, and helped me to realize that I can see problems out in the world and kind of create solutions, and people will actually kind of back me and also pay for the solutions that I create. Unfortunately, did not IPO at 11, but that was a great experience. Went through kind of traditional kind of state-funded education, and then went to the University of Sheffield, which is obviously very different from South London, and studied English and philosophy. In my second year, I decided that I was kind of tired of beans on toast and wanted to make some money upon graduation, and decided that the money was going to be in finance. So I put my applications in for summer internships and kind of work experience, and got rejected from all of them. And it's that chicken and egg situation of you need experience to get experience, and it's really hard to kind of get your foot in the door. I went along to this kind of random event where I met somebody who worked at Nomura, the Japanese investment bank. And he was kind of talking about Nomura encouraging people to apply to the graduate schemes. And we got on really well because he's a very straight talker. He kind of took me under his wing, and in retrospect, I realized it was kind of a mentorship relationship. Introduced me to the head of recruiting at Nomura, kind of showed me the ropes essentially in terms of this is how you kind of get your foot in the door. In my third year, it was the only graduate scheme I applied for, and I got it. So that experience in my second year, when I tried to go in through the front door versus when I kind of had cultivated some networks and a bit of kind of, I guess, nepotism, were kind of polar opposites. And it made me realize that when you have a network to kind of leverage and tap into, even at the kind of entry level stage, it makes a huge difference in the opportunities that you get access to. So having sat at the intersection of these worlds kind of throughout my life, I realized that there was so much talent back home that would completely excel in this graduate scheme at Nomura, but first of all, they probably think that a place like Nomura wouldn't hire someone like them, and they probably don't even know what Nomura is. So I realized that businesses were missing a trick, because there's so much great talent out there that's currently kind of going untapped, because companies aren't reaching and connecting with the right people in the right communities to encourage them to actually get themselves in the process in the beginning. So spent 2 years at Nomura, then joined a fintech startup as employee number 19, and helped them scale to $1 billion of assets under advice. It was in the high net worth wealth management space. Loved the tech startup space, but my passion wasn't necessarily helping rich people manage their wealth. So wanted to combine the kind of tech and startup with a positive social impact that aligned more with the contribution that I wanted to make to the world. And yeah, Luke Not Luck was born about kind of, say, 16 months ago. Went full time, just me and my laptop. And now we're a team of 8. We've closed our first funding round of 150K a month or so ago. And we've started to bring on some exciting customers like, who we brought on? Savills, De Beers, a diamond company, also The Economist. Those are probably the most recognizable ones. And then also some other kind of startups that are growing and obviously want to increase their kind of pipeline. I should probably tell you what Luke Not Luck actually is. So Luke Not Luck is a diverse careers platform. So we've built a talent partnership network of over 50 different organizations, from churches, community groups, kind of a grassroots-led talent acquisition process into our talent pool, to give companies access to candidates that they're not currently reaching through their kind of talent acquisition marketing channels. That feeds up into our platform of over 16,000 kind of active candidates. And then we've also built the technology to ensure that the right candidates are matched to the right opportunity. So there's over 125 data points that are taken into consideration when a candidate's recommended a role. And it's not just you've studied this, so you should get a job in something that's directly related to that. It's about matching candidates holistically based on their values, their interests, the type of company they're going to work for, their type of working style, and actually their self-identified skills, so that we avoid the possibility of AI bias. So yeah, I think I've covered most of it.
I think you have. That's fantastic. Thank you very much. And if you could just move me back to the agenda, that's lovely. Thank you very much. Thank you all very much. That was very illuminating. Just before we get into the Q&A session, I'd like to share with you a few statistics about the funding market, early stage angel funding market in the UK. The SEIS, that's the Special Enterprise Investment Scheme relief, that's where the investor can get 50% of their investment back against their tax relief in their same year, end of year tax returns. In the year to April 21, just over 2,000 firms raised 175 million. That's about 80,000 per company, which is about the same as was raised in April 20. The statistics for 22 won't come out until early next year, but my guess is that will increase, probably quite substantially by 25 or 30%, as we were coming out of the lockdown and people were starting to think about investing again. The EIS market, the main enterprise investment scheme market, where it's really chunky and the investors get back 30% of their investment against their tax return. To the year April 21, 3,700 odd firms raised just over 1.6 billion. It's about 300 odd thousand pounds per company. And that's a bit less than in 20. Again, I think that the 2022 statistics, we're going to see an increase on that. And my guess is by 25, 30%, maybe even 40% rise in that, again, as we came out of COVID. A bit of a hidden gem is the venture capital trust market. It's not, you don't hear about it very much, but there's over £600 million is invested every year into about 40 venture capital trusts. They typically invest in scale-ups where you've got the revenue model, you've got your customer acquisition cost buttoned down, your customer lifetime value, you're really accelerating and investing in marketing and international growth. Trying to get into VCTs is quite difficult as they're below the radar, and you normally need a corporate finance house to introduce you, or more likely, just do the research on them, find out who they've invested in, and pally up with one or two of their companies and get an introduction from another founder. Much more effective to get into a VCT. But they like to do typically £500,000 or £1 million plus in each of the investments they make, and will often follow their money. This is some of the challenges I've observed recently in the marketplace. You need to be aware of the backdrop. NASDAQ's down 33%. Just amazing. This year. The S&P, the main market, the big board's down by 23%. The AIM market in the UK, down by 35%. And in the last quarter, quarter three, only one company raised funds on AIM for £3 million. It was a complete disaster. You've probably read Made.com and Snapchat shares are down by over 90%. Made's going to go into liquidation. They can't raise any more money. Snapchat are laying off 20% at least of their staff. Global venture funding in quarter three 22 down 53% year on year. Another interesting statistic, the enterprise value revenue multiples are down by 50%. Just an amazing collapse in valuations. And the enterprise value EBITDA multiples are down by 18% year to date, probably because companies are now making more profits, so relative to their enterprise value, they haven't dropped as much as compared to the revenue multiples. Europe, VC, software as a service investments are down 43% quarter on quarter in 22. And interesting statistic, in 2021, there were 537 unicorns born. That means the companies raised funds that put them at a valuation of $1 billion or more. However, in quarter three this year, just 18 unicorns were born because the amount going into the companies is smaller than it was last year, and the valuations are significantly down. So I hate to say it, if you have ambitious valuations, you probably need to think a bit about that, and I'm sure our panel will have some insights on that if you want to raise the question. So with all that bad news, and I did see one other bit of bad news as well, that Meta, which is Facebook, their share price is down by over 50% because of their P&L. They announced it yesterday, I think it was, and their shares dropped another 20%. They're down over 50% this year, which puts pressure on any VC funds and the valuations they're going to invest in. And that trickles down to the angel market as well. There's no two ways about it. Because investors, particularly funds, are looking at the valuations they're likely to get on exit. And if the exits are down, the valuations they want to go in at are down as well. So just something to be aware of. So I think I've said enough for now. But if you would like now to ask our illustrious panel any questions, please do. Who would like to ask the questions? If you just ask them, give us your name and organisation, and I'll repeat them for the panel so that we can get it on the recording, because we are recording this session. So if you or any colleagues would like to view it afterwards, we can give you access to the recording. So who's got a question? Yes, over there, please.
My name is Paul Coker. I'm from Farm Smarter Limited. I wanted to ask them, what we found with all this sort of trying to do a raise, everybody's always talking about traction, and one of the biggest problems we've found is we're trying to build a platform to onboard people, and we can't have the traction without the platform. But we need the funds to build the platform. And so we're in this sort of really funny situation where we've got about, almost 1 million people waiting to onboard, and we can't build the platform. So
right, the question.
how would you approach it?
All right, the question, just for the recording, is we have one of our delegates here today, attendees today, who has 1 million people waiting to get on your platform. Can't get the traction on the platform till you've built the traction, but can't get the investment because it doesn't have the traction. Who from our investor community would like to have a go at that one? And then I'll come on to our entrepreneurs.
I can give it a go. I think that you have to look for different investors who are not asking for traction. If you go to EIS investors, they will quite likely ask for traction because they are investing at a different stage, but pre-seed and seed. Of course, traction will help you to get interest, but it might, at least in our case, it's not the most important factor. That's why I put the slide on, because we are looking at different categories. Traction is one of them. But actually, if you don't have much traction, but you are strong with people, with your team, you are strong with proposition, you have very good market strategy, and we see that it can scale up, then that might be enough to get funding. So I think that there are investors who will not ask you for that. But of course, you have to show that there's more apart from traction in that investment proposition that we are putting forward.
So perhaps have a chat with Angelica afterwards. But is there any other insights from, please.
What's the platform that you're trying to build?
Right, okay. We're working with smallholder farmers globally.
Yeah.
So small margins, they don't have the same, and what we're trying to do is help them farm sustainably and reach better profitability. Yeah. So we can't go to investors and say, oh yeah, we're going to be charging them £300 a year. We can't do that. So people tend to look at it and go, oh well, yeah, we can see it. What you're doing is really great. We can see it's really commendable what you're doing, but where's the money going to come from?
Yeah. So you've got 1 million people that are queuing up to.
I just came back last weekend from a trip to West Africa, and we've literally got about 1 million farmers asking us when can we join the.
Yeah.
So it's
Yeah, I think that there's value in that 1 million, right? So I know that maybe not all the farmers can kind of put a deposit down or something like that, but maybe in different kind of countries they are able to do that, and you can use the interest from the customer base to actually generate some kind of upfront cash, and then even use that to then leverage other types of equity. I would say.
Also that we did have to build. We've done a proof of concept that's being tested out in the field.
Yeah.
And we did have just under 400,000 investment from Innovate UK to build it.
Yeah.
So it's not that we're not.
Oh, fair enough.
We're not
That's
coming
good.
from a position of not having anything, but it's now we've got to the point we have to build a better platform that's robust that can onboard those people. And this is where we're kind of like, people say, oh yeah, well, what's the traction? And yeah, we don't want to know that Innovate UK has invested that much money because that's just a grant. It's not. It doesn't count. So we're kind of flummoxed by that whole approach.
We actually give points for Innovate UK grants, so our methodology. So I don't know who you were talking to, probably not to us.
Paul, I'm sure you've explored convertible and advanced subscription agreement, that kind of approach, so they haven't got to worry about it, because normally that issue is around, well, what's the value of the business today? What am I investing in? But if we'll defer that conversation and valuation for 12 months or so that you can use the money to build the platform, and then we'll decide if you're not doing very well, the valuation's coming down. If it's doing well, we'll get a discount when you do the next investment round. So that
we've talked about safes and stuff, but that's with the American Silicon Valley potential sort of investors.
Okay.
All right. I think follow it up afterwards, if I can suggest, okay? All right. And have a chat to people, and they might be able, and I'm happy to give you the benefit of my experience as well. So, okay. If I can. Next question.
Oh, sorry, I just had a question for you. Are you a non-profit or a for-profit NatWest?
No, unfortunately, when you get Innovate UK grants, you have to have a profit sort of.
Works.
So you have to have a commercial.
Needs to be switched on.
It is.
All right, do we have another, can I suggest the two of you have a chat afterwards in the networking? Do we have another question for the panel, by any chance? Yeah, we have a couple over here. Thanks, Barney.
Thank you. Hello, I'm Devin, company's Armed. It's an insurtech for tradespeople, and just hearing the comment there about convertible. So we raised an amount, 400k at the beginning of this year. Part of that was through Angel's Den. So very pleased about that. We're now at a point, we've progressed, we've a number of developments. We're now looking to raise again. And so we're just on the third, we're finalising all the materials, and we're hoping from kind of next week to go out to existing investors and new ones. But conscious obviously of the market and some of the data that you had up there on the slide, would the panel have any thoughts around convertibles as potentially being a good option given the climate, or do you think it would be better just to go with a priced round? We would obviously want there to be an increase because we've progressed since the beginning of the year, but I'm conscious also that the market has changed and valuations have been impacted. So yeah, just whether anyone's got any kind of thoughts around a convertible or an ASA as opposed to just a standard second priced round. Thank you.
Yeah, sure. Yeah, I think you saw, I think what we're seeing in the financial markets now is not entirely similar, but when COVID hit, there was a lot of financial uncertainty, and you saw a huge increase in CLNs, as you mentioned, because people just didn't know where they were headed. They thought it'd be easy to just get that money in without having to decide the valuation. I think the only considerations I'd make is if you're looking like an ASA, which is EIS eligible, it has a 6-month stopgap, so be prepared to raise within those 6 months and have that kind of proposition in the back of your head. And some companies will look funny on debt, but I think in times where you don't know what's happening financially, I think they're quite a good idea, having not done them as an EIS fund. But yeah, that'll be my point.
Brad, you raised some debt.
Yeah, we've raised debt, not convertible, but we have recently raised debt in the last few months for that reason, just looking at valuations, the sort of appetite for investment at the moment. So a lot of the investors we spoke to were doubling down on their existing portfolio rather than new opportunities. So we went down the debt route. It was, not to say it was an easy process, but I think a lot easier than sort of an equity investment round. And yeah, so we've done that recently. We looked at it in perspective that the repayment terms were manageable for us. The positives of not having to give up so much equity, and yeah, just a quicker way of getting cash into the business. So it's worked pretty well for us.
So yeah,
one point I just make as well is just check the details of the CLN. If a huge coupon that's going to be charging you and you're not going to be raising for a while, that's going to be not beneficial. So I think if you're coming out in this market, there's plenty of people who will offer it. So I think it would be talk to as many people as you can.
and just be aware that angels can't enjoy EIS tax relief on a convertible note, only on an ASA note. So just to be aware of it. So it means you're going to go to institutional investors or loans loan companies rather than angels or angel funds. So, and you won't be able to do VCTs either with a convertible note, unfortunately. So, there was a question, I think, behind. If you could just pass the microphone. No, the lady behind you. That's it.
I also had a question, can I?
Sorry, yes.
Yes,
Please.
okay. Hi, I'm Liz. My company's called Mary R, and we help people buy homes together but own individually. I had a question around getting a kind of pilot and partnership with a big organisation early on. I know it can often be a deal breaker or add a lot when you're raising that early stage investment, because it just sort of demonstrates traction and scale. So I guess for Lauren Sydney, how do you go about convincing an NHS or a Savills to take a punt on you when they're often also, especially the NHS, traditionally kind of very risk averse?
Okay, good question, Lara.
Yeah,
I think
very
it's one
happy
for
to
you.
jump in on this one. So I think the reason why we were successful in our seed round initially was that we worked very, very closely with our customers. So we got our customers to do a lot of the storytelling to investors for us. Our first pilot actually was on the back of a grant from Guy's and St Thomas's charity. So we got a grant, whether that's relevant or not, I know you've got a grant for your business already, but we got a grant with the stipulation that we were going to pilot it with junior doctors at Guy's and St Thomas's. And then on the back of that, I actually joined 2 accelerators, and that's how we won customer number 2. We didn't give anything away for free. It was really important for us that the NHS bought into this. So we did like 12-week pilots for £3,000 or something like that, like really nothing. But we got that commitment from them that they would pay for something. So it then demonstrated some traction. We were very clear on how we designed that trial. So we were like, look, it's 12 weeks. We know we can deliver X, Y, Z by then. You will get an impact report at the end of it. It will satisfy what you need to show value. And then it's, in return, will you please do a customer testimonial for my investors, or will you speak to my investors? And they were kind of happy to do that. So my investment in that early stage, that round, was very much like, here are the macro dynamics, here are the micro dynamics, here's a couple of pilots we've got off the ground. But I got that commitment from the NHS that they were kind of happy to help me out in that sense. But I think it was really important that they paid to work with me, because unfortunately then you just end up giving stuff for free, which, yes, okay, £3,000 was not a lot of money, but I could do something with that, because at the time I was one person with my laptop as well. So a combination of getting that grant and then having that alignment of the grant means you can pilot in this area was really helpful for us. So I don't know if you can do that with a corporate, perhaps you can get a bit of, corporate investment, or partner up with somebody to, you scratch my back, I'll scratch yours kind of thing. We were very clear on how we designed the trial. And then I knew then that I could get that testimonial for the investors, which means they could speak directly to the end user, I suppose.
Yeah. I'd echo a few of those things. I think that not trying to, especially with your first kind of big partner, it's not about making a huge amount of profit on that deal. It's about building that relationship up, because even if it's kind of B2B sales, it's actually, people are it's still relationship based. People still deal with people. Being very clear about what you're going to be able to deliver and be able to kind of show that upfront as much as possible. So we do kind of free trials, so they can see the value of the talent that we have on the platform, and then they have the justification to go out to budget and say, actually, we want to allocate kind of 10K this year for our budget to use on this platform or something like that. So being able to give them every reason to say yes and kind of want to partner with you, being able to kind of provide a lot of data, because especially a lot of these kind of big companies, all of their decisions are kind of backed by data, and being able to kind of ease them in. So like you say, the kind of 12-week free trial, and then kind of say, okay, let's carry on, and building it up. So it's kind of like dating, right? You have a first meeting, and you gradually build up to kind of more serious commitments. And I think that one thing that's helped us with that, probably the hardest thing about kind of getting new clients on board, is actually getting to the right person. I feel like my LinkedIn inbox is just spammed with people trying to sell me stuff, and how do I stand out when I have something kind of value to actually genuinely and actually really want to talk to this particular person? And the best way that I've found is to work out the kind of network links and get that warm introduction. So building out your kind of network within those kind of different ecosystems where your ideal buyer will kind of hang out. So kind of different communities and stuff like that, and being able to then ask for a warm introduction, because then you're way more likely to get a meeting and get it quickly. So actually through the Company of Entrepreneurs, I got an introduction to the CEO of The Economist, and she then passed me straight down to her chief of talent, and deal was closed within 3 weeks. And that's like unheard of for B2B sales, but that's because we got straight in with the decision maker. So having that network of people that are willing to kind of introduce you to the right people, and then you can say, well, we've got The Economist, go to the Telegraph, go to everyone else, and say, well, your competitor's doing it. So it's kind of like doing that, and also building your own personal brand, I think, is also important, so that you're seen as like a respected person in the industry that they would want to speak to, because sometimes, especially like I guess being young, or sometimes on these like Zoom calls, you get kind of childed a little bit. So having like a brand out there where people can respect you to have those negotiations and conversations, I think for me personally as a young entrepreneur, has been quite important to push out there. That would be my advice.
Brad, just before we move on, you've partnered with quite a few of the big drinks companies, haven't you?
Yeah.
And been able to rape and pillage nearly them. How did you get in the first one?
So I think slightly different to Lara, we did offer free trials because we really needed that foot in the door, so we did. We tried. It was a numbers game really. We tried as many as we could and had success with some, but a lot of no's along the way. So it really was just a case of knocking on as many doors as possible. And then I think once you get that first one, and it's hard, it is hard to do. It takes time, but once you get that first one, you've just got that credibility then to get others. But it's the first one that's always the challenge, especially when you've got no other sort of like enterprise clients at the time, and they're the first one. And I think we ended up just being quite honest to say that actually we need you a lot more than you need us right now. And I think if you've got that honesty with them, you can build that relationship, and that's what got it over the line in the end, was just forming that relationship. So I think that's really important.
Okay, we have one down the front. If you could just move the microphone down, that'd be lovely. And then we'll come to you next. Okay.
Thank you. My name's Deval. I'm a founder of iTal, which is a CBD gum brand. And it's a question, sorry, not to alienate anyone, but it's to Paddy, just to understand a bit more about the working capital heavy that you mentioned. I'm actually beginning to realize now that there is a lot of financing, working capital involved around this. So I just wanted to understand a bit more from your experience as to what types of things we should be looking out for within the FMCG space.
Sure. Well, I guess the big issue really is around stock. You normally have to buy stock, which you're going to hold several months worth of stock in advance. You might have to be buying certain elements of that, maybe certain ingredients, etc., and holding that. Depends on your manufacturing arrangements. But so it was, in our case, it was because we were growing so fast. We were always constantly having to backfill with more stock, and we were looking to increase the number of stock lines we were supporting. So I think there's that to be considering. How do you balance out the credit terms you're going to pay to your supplier, and the terms you're going to get? Are you selling or planning to sell through retail, or are you D2C? What's your channel?
Well, currently we're D2C, so we do a lot of markets. Bohemia Markets is one of them. We've just done the markets just in
Spitalfields.
Spitalfields. Thank you.
Yeah.
Just lost my head. Yeah.
Yeah.
So it's building that direct-to-consumer relationship at the moment. However, online, the algorithms are not with us because of the nature of the CBD products that we're selling. But wholesale is something that I'm really more pushing towards, because that's how gum is actually sold, full stop. So yeah, it's
Yeah, I mean, and then of course you're into margin. So then, typically a retailer is going to want 40% margin, and then you're going to have maybe a wholesaler is going to take 25, 28, whatever, and then you've got the payment terms. So that's why it becomes quite an elongated beast, where you're trying to live off this thing that is growing like topsy, but you hope, but which is also constantly needing to be fed. So that was the issue that we faced, and then of course you get into promotion. If you're in a grocery retail, you're typically spending 10% of what you're selling on in-store marketing and support and promotion. So it's a kind of constant fight, really, to do that. When we started with our baby food, we were on quite tight margins. We were maybe making, depending on the recipe, 28 to sort of 32%, and we desperately needed to get to 40% plus, which we got there when we were able to move to a larger, more efficient manufacturer. Okay. So we were on tighter margins in the first phase, and that's why we started with 400, and so within 18 months we got 3.75 million. But that was the issue we were faced with.
Thank you.
Okay. And yes, please, your question.
Yeah, hi, I'm Vincent. Thank you, everyone, for those talks. That was really interesting. I was just wondering about the slide that you put up, kind of with the situation and all the markets dropping. Yeah, it's pretty depressing. But and this question was specifically for Ivan and Angelique, right? Because I can understand for an angel investor that they might want to kind of think, okay, my personal savings, I might be a bit more careful given this situation. But in the case of a fund where you've raised already and that you're expected to invest in it, how are you finding, how does this situation affect your investment decisions?
Well, I think on the sales side, it's definitely affected, how many angels we want to invest into the fund. So that's been, I know I was going to move on to the, in terms of our investments, I think we're lucky in the fact that deep tech tends to be a bit counter-cyclical. It's not sort of that dictated by sort of the peaks and troughs of the big, unicorns. That often deep tech investments get taken out, sort of acquired rather than IPO'd. So we still find there are investors who think it's a safe way to keep value, especially when the cash is falling in value, interest rates are up. So we have seen a drop off, but not a huge drop off. And I think with their backing, we continue to travel as normal, just because of the 5 to 10 year nature of what we invest in.
But I thought maybe I misunderstand it, but I thought that we're over halfway through the fiscal year now, so you would be looking to invest the money this year that you've already raised, right?
So we invest on an evergreen basis. So we invest we raise 4 times a year. So there's always different tranches of people we invest. So we can't really, I guess, stop in that sense. It's not like managing a portfolio.
And Angelique?
I have to say we are very positive in terms of investing and fundraising. Investors definitely look at public market and how things go, and they go to private market to invest instead, because private market is not affected as much, obviously has to adapt, has to look what's going on out there, but investors do invest. And actually for us, the time of pandemic was one of the best times when we were getting more investors coming to us, and we were deploying much more money into pre-seed and seed companies, because a lot of investors know that from history, the best companies were born in the times of stress, in the times of slowdown. They were more resilient, they were preserving more cash, they were more careful, and because of that, they developed a culture of very strong financial controls and very careful management, and we expect that this time it will be exactly the same. And because we are pre-seed and seed, our perspective is 5, 7, 10 years. So it's a long time, a lot of things will happen. And we believe that right now we are investing in entrepreneurs who are prepared just for everything. And investors are with us. So I'm actually very positive. And I think that with the changes that are supposed to come next tax year, we'll see really entrepreneurship accelerating in this country, and investors are also waiting for those changes to be confirmed, and we do expect that there will be money to invest in startups.
Sorry to ask one more. Are you referring to like changes in SEIS and EIS? Okay, thank you.
Yes, so the sunset clause is not going to happen for EIS, and SEIS will be expanded to allow companies to raise £250,000 instead of 150. Hasn't been legislated yet, so fingers crossed. But if that happens, it will definitely improve the scene for entrepreneurs.
Definitely.
Sorry, can I ask this to follow on from that?
Yeah, just before we move, I'll come back to you in a minute and give the microphone. Brad, you're in the process of trying to raise at the moment. How are you finding valuations?
Valuations for us haven't been affected too much in that, so we've gone through like two rounds recently. One was through angels, and angels have always tried to push the valuation down. The raise with institutional funds hasn't been like for us there. We haven't noticed too much of an impact. Where we have seen the impact is more people not willing to invest now. So a lot of we've had probably the last quarter we've had more conversation. We've been more active than we have since I can remember really. So lots of conversations, but no real outcome. It's just sounds great. Let's just see how the next few months go. Let's pick this up again in January, and that's really been the case across the board. So yeah, valuations from our perspective haven't been affected too much, but more just appetite to invest now. They just want to see how the market goes really.
Sorry, let's follow your...
Sorry, yeah, it's because it's the EIS, SEIS question. A couple of months ago, was talking to some VCs in Silicon Valley about raising, and the whole question of SEIS and EIS came up, and they were basically like, not interested, don't care. And it was really, what was interesting also for me was the difference in the attitudes that they had to invest in from what we got from the UK. And we were toying with the whole thing where they suggested that maybe we should register our company in the US so that they would then be able to invest. And then we thought, no, we've had Innovate UK funding. We've got to stay here in the UK. We're not going to do that. So what my question was, how do you square that whole relationship? Because when somebody does a raise here under the EIS, SEIS, and then maybe they want to go and do a further raise in, say, Silicon Valley, because I know that then it gets rather complicated. How do you, with the paperwork, how do you square that?
I can't answer that question. I don't know if any of the panel can.
Well, I mean, there are special provisions within the legal documents that state that you're going to make your best endeavours to adhere to ES structure, so that it's like, holding your shares for 3 years, etc. I mean, honestly, there isn't a way to fully protect that. It's not a sort of legally binding clause. But I mean, I think the whole point of EIS and SEIS is to allow angels who maybe wouldn't invest into a company the opportunity to. It's not negating the fact that venture investors are looking for value. So a lot of, as you said, the US is a huge market. They are great at just taking a punt on an idea, and so if that's right for your company, you should go for it. But you can do both. I don't think there's necessarily a one or the other.
You might have to look at setting up two companies. Well, the holding company, I don't know, which you'll probably need then agreement from your angel investors in the UK to do that. But if you're going to raise X millions and add value to the business, they're probably going to agree. So, but you need to take some advice on it, some legal and accounting advice, unfortunately. So.
Well, SEIS is specific to the UK, SEIS and EIS, but if you raise here first, your company grows and you move, your market is US as well, I'm sure that good lawyers will figure it out how to make it happen for you to raise from US investors. Of course, they won't be interested because they don't know what it is. It's very UK specific. So yeah, as Ivan said, there's no right or wrong. It has to be right and good for your company. What options you have actually. If you have option to raise from US and skip SEIS in the UK, well, maybe that's fine.
Any other questions? Yes, in the middle. We've got some. If you just pass the microphone, lovely, we'll pass it down.
I have one.
Yes. Yes, please.
Hi, my name is Angela Malik. I have a company called Planet Nourish, and we are a health tech company. My question was about early raising to Angelique. What I'm feeling now with pre-seed is that the risk is being priced quite high. Do you feel with SFC, with the investments that you're making, that you're looking to take a bigger chunk early on to price that risk?
Probably the short answer is yes, but it's not as simple. It has to be the right price. So no investor wants to demotivate founders by just taking too much. It has to work for you as well. But from a longer perspective, you need to provide an exit. And that exit has to provide a return to investors. So if you set your price too high in terms of valuations, then the pressure is on you to achieve much more in the future to bring investors their return. And that might be difficult. And that's why the valuations are going down, because of the slowdown. We know it will take you longer. It might take more money. It might take more time. It might end up with lower exit than everyone would like to, which doesn't mean that it won't be a profitable and a nice exit for investors. But that's why that initial valuation has to be right. So the whole journey makes sense for investors. And as much as I understand founders want to keep as much as possible and they want to plan for future runs and dilution, I don't think that the valuation is the most important thing when you raise. If you're going to be successful, you will make money as well. You will make profit from it with lower valuation or with higher valuation. But right now, if you need money, just get money, because that will take you to the next stage.
Thank you.
Thank you. And can you just pass it down, lady?
Hello, my name is Roxanne Campbell, and I own a luxury mobile nail company named Revanish London. And the question that I wanted to ask is, how long would you say that it took you to raise money for your business when you first started? Like, whether it was from investors, like, did you have to, like, how much time did you have to pitch, would you say? Or how long did it take in terms of months or years? I know it varies.
That's a very good question. I did have it on my list.
Okay.
So thank you.
You can wait then if you want.
So,
Well,
the three entrepreneurs.
I'm happy to take that one. So I started kind of seriously deciding to raise and starting to have some conversations probably around the end of November, December last year. And we officially closed the round in July. So maybe kind of 6 to 7 months. I think 6 months is around the kind of average time it takes. But I actually looked through the kind of Google Sheets tracker thing that I've been, and there's like 154 kind of contacts. So not everyone was an investor. Some were people that could introduce me to people, but definitely had over 154 meetings to get 5 yeses. So it's hard. Yeah, not all of those people were the right stage, but yeah, I'd say about 50 of them were potential kind of investors. So you get kind of 9 no's and 1 yes, but it is difficult. And I think like networking and kind of getting into those communities and starting to build those relationships with investors as early as possible is really valuable, because all of my investors, even though I did like loads of those pitches and all this other stuff, all of my investors came through. I went to a networking event, spoke to the organisers. They had like a diversity panel. I was like, I should have been on that panel, and built a relationship with them there. And they ended up investing 100K into the company. And one was a introduction from somebody else that worked in recruiting, and then he also brought in his friend. So it was all through networks, even though I did all of the kind of pitch competitions and all this other stuff to try and find investors. So building those relationships before you're trying to raise, keeping them updated with the growth of the company, so that when you do have that raise conversation, you're not coming in cold, and they're also kind of bought in and invested in the company is good now. So even though we've closed our round, every month I'm kind of sending to our kind of like potential investor community, just sending them a bit more information than what's available publicly, and obviously less than what our investors get, so that they're kind of kept up to date, and they're like, oh, this company's ticking away in the background, so that when next year we come back to say, oh, like you've seen our growth that's been happening because we've been keeping you informed. Do you want to have a conversation about the next round? They've said when they passed on the first one, keep me updated. We actually have, and we're kind of drip marketing, I guess, for investment. So yeah, building those relationships early on was really important, and yeah, it's really hard.
Okay, thank you very much.
Yeah.
Excellent. Okay, anything to add from our other two entrepreneurs?
I was just going to say, I always used to say work on 90 days, from first contact to a deal being done, but I think that has got longer now. That was a few years ago when we were raising, but yeah, always assume that. Also, don't just assume that the people who said they're going to invest are going to invest. We came very close. Someone was due to put $250,000 into our business, and just went silent on us, and we kept trying to recontact, and we were 2 weeks away from having to close the business and make 10 people redundant. And then our chairman's PA said, "I've got a rich uncle, shall I talk to him?" And he said yes. and that deal was done in the space of 10 days.
Oh, okay. Thank you.
Yeah.
Okay. All right, thank you very much. Another question. There was one, I think, I should pass that.
I've got one actually.
Okay.
I kind of had, sorry, hi, I'm Tamsin. I'm from Where You At, the app which helps people find their friends inside nightclubs. Off the back of that, I've kind of got a question more about like gender in VC and funding more generally. I know that 2% of VC funding goes to women. Is there any sort of experience that you've had that you'd like to talk about or share? And is there any kind of advice you have for like young women trying to raise capital? Yeah.
You can go, I'll go after.
Yeah, that's a really important question, and I have to say, over the last 6 years, I didn't let the fact that I was a female founder even enter my head. I really didn't. I was like, I'm going for this. This is what I'm doing. Colin will know, when I stood up and pitched at Angel's Den, you stand up and you're like, hi, my customer's the NHS, and like half the people are like, bye, no thanks, and then the other half are probably looking at me going, how old are you, and are you going to have a baby? I don't know what's, so I don't think I necessarily registered any of it. But my boyfriend also runs a deep tech startup, and I'm well networked with loads of other founders, and I think I probably have experienced it. Actually, over the last 6 years, it has been very difficult. I feel like I've had to prove myself a lot more. I've had to be super prepared, be 5 steps ahead of any questions. Now, maybe that's because I have a tricky business and, my customer is the NHS. Who knows? It's hard to know. So I think my advice and my approach has always been just, work your socks off. Don't worry about it. Get out there, network. If you've got a good business and you're doing a good job, you will find the right investors, as Angelique has said. But I'd be lying if I said I haven't felt a little bit like I've had to prove myself over and over again. So, yeah, I think it is challenging. I think the stats are out there. I haven't let it put me off, to be honest. I've just worked really hard and been super prepared, and that's kind of who I am as a person. So I don't know if that answers the question enough. But I feel it, but I can't say I've got the evidence that I would have done better if I'd been a guy. So I think you just have to know your business, find the right investors, and absolutely go for it. And there are a lot of initiatives out there trying to attract more investment in female founders. We're backed by Angel Academy. They do a brilliant job. I've got massively supportive angels through Angel's Den. So it hasn't stopped us at all, but it is challenging. I think we have to be aware of it.
And unfortunately, I would say, and Lara is an absolute example of this, you have to be at least as good as the other people pitching, if not twice as good if they're male, to stand out. And Lara was superstar. Every time Lara pitched for me, I just knew it was going to be the best presentation, and it was, hands down. Slick, no ers and ums, the slides, the timing, the smiles, the enthusiasm, it was just amazing. So unfortunately, you probably have to be that bit better, but that just puts you on your game.
Thanks so much for sharing.
I would advise to look at investing in women code signatories because they are most likely very woman-friendly VCs that are really trying to increase the number of female entrepreneurs that get funding. And we are obviously one of signatories, but the reason I'm saying it is because that group of investors actually put effort into actively looking into it and gathering data. There's a report on this, and you can learn quite a lot from it. And at the same time, probably going to an investor who's assessing your business from the perspective of your gender is probably not the best investor to have anyway.
What I would add is that like you're never going to have any other experience than raising as a woman, so you can't really say like definitively that I would have done better if I was a guy, but you can definitely kind of compare, and the stats speak for themselves, right? So it's around 2% for women, but it's 0.02 for black women, so 0.1%. So, and that's I think it's also because a lot of the capital, like in the early stages, like you invest in people who are like you and who remind you of you, because there's that trust. If you like, it's the same kind of like problems, right? So I think that kind of without kind of repeating kind of what you've said, I think the only other thing that I would add is like everybody has a set of advantages and disadvantages which change depending on the circumstance that you're in. So yes, I might be a black, like mixed heritage woman, which looking at the stats, like, I should not be doing this because it's probably very unlikely it's going to work out. I think one, you've got to be a little bit crazy to be an entrepreneur and do this anyway, because if you look at the stats, just not even an investment, just if your company's likely to be successful, it doesn't look very hopeful. And then add those stats, it's just like, why are you even doing this? You have to be a bit mad to do it in the first place. And I think also having that mentality when people kind of tell you things are kind of like you've got 0.1% of actually doing this as a chance, and saying, well, I'll be that 0.1%, right? So not letting them work against you, but things that worked and like to my advantage is, I guess, I've always been around lots of different people from different backgrounds, so I can adapt to those different communities and have those conversations. When I want to, I can be pretty well spoken, and all of these different things that kind of add ticks in my boxes as well as the kind of X's, and you just got to kind of see. And if there was kind of anyone who didn't want to invest in me because I'm a woman, I don't want their money anyway, right? And I've got a team of great investors who really understand the mission. They're all white guys, but a lot of them haven't kind of come from money. They've built their own wealth, so they understand the mission behind the business in terms of being from a lower socioeconomic background and recognizing how important access to opportunity is. So even though we weren't able to connect on a gender or an ethnicity level, we were able to connect on a human level. And I think that's a really important part in terms of building those relationships with investors, because it is a really serious like relationship that you're getting into with them, when there's a lot of trust and they're trusting you with their hard-earned cash and money. So being able to connect with them on a human level and build that rapport and not focus on the negatives, I think is probably the best way to navigate the crazy situation.
Great, thank you. Any other questions at all? In the back there, could we pass the microphone to the back? Gentlemen, a couple of rows back.
Thank you. Hi, everyone. My name is Yomi. I'm currently studying at UWS. I'm studying BA International Business, so I'm a student. And I'm looking forward to launching my business. I have a business idea for sustainable clothing. So my question is, how do you identify your target audience?
Sorry, your
target audience.
Consumers rather than investors.
I didn't get
Sorry,
that.
are you saying target audience as in consumers for your product rather than target audience of investors?
Yes.
Yeah. Well, I guess in this day and age, the old minimum viable product comes up to mind, and with the ability to put up a website with a product proposition, test it out, see how many people you get making inquiries or provisional orders, etc. And then, I've seen so many people doing this now, and it's just a really good way of just testing it out there. I mean, it's getting harder and harder using sometimes the algorithms and Facebook and others to get in front of people. But, depending on what kind of product clothing range you're talking about and who you think your target audience is, I mean, that's the other thing is making sure you've got a really clear proposition and you understand who your target audience is. I mean, if you're asking the question about how do you find them, then I question you, have you actually defined who that is? Just because you can doesn't mean to say you should in business. And that's advice I give to everybody all the time, because people come up with these great ideas, and I'm saying, well, just because you think it's great, and because you could make it, and because your brand likes it, doesn't mean to say there's a market, or at least an investable market for it. Now, sustainable clothing absolutely is investable, subject to you being able to make it clear to your audience, consumers, why they want your product, and then being able to translate that to an investor as to what the scale of the market opportunity is and what the return they're going to make by backing you in delivering that consumer proposition. But we see it so many times, particularly with consumer products, is if there's no clearly defined consumer proposition, there's no business. And that's where most of them fail. But so not to be a downer on the point, but so the emphasis on be really laser, give that person an identity. What's their name? Where do they shop? What do they do? How were they educated? Where do they go on holiday? Which gym do they go to? Which sports clubs or whatever do they belong to? So you can really hone in on who they are and where you're going to find them. Make your life a lot easier.
Yeah, I agree, and I would actually don't talk to your friends and family because they'll tell you it's great because they like you.
Well, they'll tell you don't do it because they love you.
Yeah, maybe. I would say go out there and talk to those people and read a book called The Mum Test, which helps you to ask the right questions to potential users. The premise is that if you say to your mum, "I've got this idea," she will, unless she really loves you, she'll say, "Oh, it's amazing, sweetie. Go ahead and do it. That would be fantastic," because obviously she doesn't want to dampen your dreams, but actually asking the right questions to the right people that aren't leading. If you go and say, "Oh my God, I have this amazing business idea. Would you buy this?" They're probably going to say yes, so you go away. But that's not real customer data and feedback. So you don't want to invest your time and energy into building something that everyone has told you that they would buy, but when it actually comes to it, they don't actually put their hands in their pocket. So yeah, I would recommend read that book. That's what you said.
What's the book again? Sorry.
The Mum Test.
The Mum Test. Okay. Thank you.
I actually have a free PDF version if you want me to email it to you.
Okay. All right. Thank you.
Right.
Excuse me.
There's one at the back, I think.
You have a couple of questions, so we're running out of time. So
There's a gent at the back.
do it, but we have a question at the back. If you could just pass the microphone to the back. Oh, we got one.
Hi. Thank you. I'm grateful for the information you shared. What I wanted to ask was I got a marketing agency, and sort of my clients have included BBC, Sony, and I've worked with the NHS. And alongside sort of doing that, I did sort of burn out, and I'm going into the path of sort of well-being technology. So I'm working with NatWest. I've got an MVP of a meditation app, and I just wanted to know everyone's views on health and well-being and mental health after COVID-19, and the investment of where you see it going. And also, I just wanted to ask your book recommendations, a book each from everyone, please. Thank you.
By the way, the book was on my question list, but we'll come to that before I wrap up, okay? But health and well-being apps.
Do you want me to take that one?
Why don't you?
So Improve Well, our solution to well-being at work is basically allowing frontline staff or helping them to have a voice to change their day-to-day working environment and also be the best advocates for the patients they serve. So that's how we're doing it. I was on a panel actually last year, and I can't remember who it was that was on there now. I'm really sorry, my mind's gone blank. But one of the investment firms, one of the big VCs, Balderton, was saying that actually well-being in the workplace is the place to be, emerging from a pandemic. It was not just the healthcare workforce that's been stressed, it's all of the workforces that have been stressed. And I think people now realise that you've got people working at home, you've got people that aren't connected, you've got burnout is a huge issue, obviously in the healthcare workforce, but in other areas as well. So that is what we're trying to address with our solution. So I'm biased in the sense of saying that is a good place to focus your solution, and I think investors are seeing that as well. So yeah, I'm saying all for it, because I think in the wake of a pandemic where the global population has been under so much stress, there's never been a more important time to look after people, whether that's yourself or an employee. So yeah, I would say it's a really important area.
Any comment from the investors at all?
Well, I was just going to say, so we're part of an organisation called, or supporters of an organisation called Business for Health, and their mission is to put H into ESG. So the health of employees, the health of your employees, the health of your clients or your customers. They've got on their sort of advisory panel, they've got senior directors from big health insurance companies. They've got people from within government, etc. And there's a real movement to say we can't ignore this now. And obviously, it's been exacerbated by the whole pandemic experience. So I think yes, you're on the right track in terms of this is a growth area, as was being said, but. What your proposition is and how you fund it, etc., is another matter. But definitely worth exploring that, and maybe reaching out to Tina Wood, who's the CEO there, or her team, to find out how you could get involved in that.
Thank you so much. Thank you.
Okay. And there is a growing awareness in large companies, small companies. So you will find it receptive, especially going to HR directors in companies, or going to HR meetings, or any conference for HR managers, just going and attending and talking to them and share the vision of what you've got and have a very short presentation you can run people through. So definitely, and I am seeing, certainly when I've been attending investment seminars, meetings, pitching events, there is definitely more and more around the health and wellness. And the ones that are getting traction are those that have got corporate clients rather than selling B2C. So selling B2B, definitely. And then charging either per usage or a flat fee for number of staff they've got, etc. Any other questions at all from the audience? Yeah, Mark, there's a microphone next to you. Thank you.
Thanks. Mark Huxley from the Company of Entrepreneurs. You started unpacking on what impactful presentations start to look like. You were more an emotional spectrum. So from an investor point of view, for the folks in the audience trying to raise money, what's going to make that investment proposal stand out to you amongst the other 35 that you're looking in that day? What do you look for? What becomes impactful? And from the investee point of view, what are your top tips back to the folks that are currently going through what you went through in the past? And obviously, as a past entrepreneur, I can tell you how tough I found it.
How many do you guys process in an average week?
Oh, yes, we look at a lot of them. So it's always about people and market at the very early stages. So we are mainly looking at how the team looks like, what skill set they have, what experience they have, what's the chemistry between the co-founders, what's the ownership structure. And for me, the most important, how they present the business in terms of financials. So cash flow, very, very important. Actually, for me personally, and my colleagues at SFC Capital might disagree, but I want to see a cash flow forecast that is backed by assumptions, skill set, and right planning, because that's basically, you give me a cash flow forecast and everything else will be behind it, including how the team, how the CEO presents it, if they are able to pick up the numbers and know what they mean, what costs they are putting in their cash flow forecast. So cash flow forecast tells you everything, even if, of course, it might not happen in exactly the same format as we expect, but tells you a lot of how founders approach a business. And financial acumen is definitely the differentiating factor between those entrepreneurs that fail and those that succeed. So if you get to profit, like we have examples here, that means a lot. That means that someone was keeping a very strong grip on financials, and that's what the business is about. So I would say the combination, being on the right market that is growing, where you can scale and exit, and have the right team that is able to execute with the right skill set, and someone who understands the financial side of your business.
I think just to add to that, there's a slide that's not often used, but I think we always find like why now very important as well. Create a sense of kind of urgency of like, if I'm an investor, if I'm an angel, can I just wait for 6 months and just go in then, and having had that de-risk? So why is it now, or you're going to miss the boat on either the proposition or the market, or the, I guess, the cost if it's too high?
Yeah, I'd just add to that on two things actually. One, just talking about the numbers, I always say there are 3 A's, that the numbers have to be ambitious, they have to be achievable, and they have to be backed off by reasonable assumptions. So just saying my hockey stick's doing this, if you can't say why it's doing this and give me a reason for how it's going to achieve that, and because I'm always going to give it a haircut anyway, but having a sort of staged process for that, but also then for me as well, particularly it's about the passion of the entrepreneur, and it's about the why. Why they're doing this? Are they just so, I was down the pub with some mates and we thought there was an opportunity to do something? that's not a convincing reason that you're going to stay the course with that. So for me, it's about take me on the journey early in the presentation to why you're doing this, why you believe, why you're going to stick at this when the shit hits the fan. And then obviously, as has been said, scalable opportunity, marketplace, etc. And why now?
Yeah. The only thing I'd add as well is on the sort of market sizing thing. I think everyone, the classic thing to do is a sort of top-down analysis, and this can be quite simplistic, and it can also, if you're creating a new market or whatever, what have you, may not accurately reflect that. So always, if you go from a bottom-up approach, you can actually show what your business model is going to be, show why you think it's going to get to that level, and show you've done your research in that area. So I'd always, although it seems to be very favoured the top-down, I would always suggest bottom-up and explaining how you get to that number.
We need to wrap this up, but the panel are staying for drinks, aren't you? Fantastic. So do come up and have a chat to the panel or myself. Be delighted to chat to you. Just before we wrap up, so we've had the three investors talking really about what makes an attractive proposition. For the three entrepreneurs, what do you wish you had known now when you started your funding journey, looking back? And that probably leads into what top tip would you give, one tip each, to the audience and the entrepreneurs looking for funding now?
Should I get?
Yeah, you want to start off?
We're doing it again.
Yeah, I've got one. The top tip that I was given and that I will kind of like stand by for any other kind of future raises is about generating FOMO. Like you were saying, investors have got to feel like they're going to miss the boat, and it's a bit of a game that you've got to play. You can't be overly keen because then it's like, oh, they're really desperate. You've got like they always say, the best kind of companies aren't raising, and lots of people, oh, we accidentally raised like £50 million, and that is because they're generating FOMO in the background. So it is a kind of like a game that you need to play, but yeah, FOMO is what I would say is really important, especially kind of in the early stage when maybe you don't have all of the data and kind of numbers to be able to help people to make a decision, because how people make decisions is lots of people make decisions emotionally and then they backdate it with logic. So allowing them to buy in and feel that really keen, that they really are passionate and they've just been able to get a really unique opportunity is something that helps people to move fast and to jump in when it's high risk.
Brian, what would you add?
I mean, yeah, obviously raising money is hard. Everyone tells you it's hard, but even though they tell you, I think you still underestimate how difficult it is. A tip from just my experience was, I think early on, you've got to dedicate a lot of time to raising money, and you almost feel like you want to just focus everything on raising money and at the expense of progress and traction and growing the business. And I think you do need to dedicate time to raising money, but it can't be at the expense of the growth. And I think I made that mistake early on, and then when I think we switched that, and then actually thought we need to keep progressing. The business needs to grow, because ultimately that's what's going to generate the interest in that investment. So it is hard. It does take a lot of time and effort, and you have to put that in, but it cannot be at the expense of growth. You have to do both, and you need to find a way to be able to achieve that.
And Laura, any back to that?
Actually, that's a perfect segue to mine. So my biggest learning is don't make decisions in your business just for the investors. So I think I made the mistake of, perhaps to Angelica's point, of people. So I actually made the mistake of sort of hiring people because I thought, okay, well, that will look really good on my org chart, and I'm going to, go in and I might tick your box on really great team and whatever. But I was hiring people like a COO. I didn't need a COO. I was hiring a data scientist. I probably didn't need a data scientist, but I sort of got a little bit lost in this is going to look really good for investors. And maybe that's because of my background in investor relations. When actually the pandemic hit, we hunkered down and it was very much like revenue. We need to just grow the business, revenue. And then suddenly you're in a position where you don't need to raise, to your point, and then lo and behold, you can raise. So I would say my two bits of advice, I suppose, are don't necessarily make decisions for your business to impress investors, which might sound like a really strange thing, but I was definitely doing that. But secondly, have a strategy in place. Like, what are you going to do if you don't raise this money? If you don't raise enough, like your business is still going to go ahead. You're still going to be making money. You're going to survive. You're going to hunker down. So run the strategies in parallel, which is what's already been said.
Great. And one final question for you all, and it was asked by somebody in the audience earlier. Is there a book that you would recommend that people read about early stage fundraising, growing a business, setup, anything around that? Anybody like to volunteer?
Well, yeah, so just a quick one, building on the points that have been made by Lara and Brad, but also this point about, a founder should be working on their P&L, not their cap table. So work to raise more money than you think you need, which is my original case, because then you won't have to be back out in the market so soon, and you can build a P&L, you build the value. Don't get hung up on the percentage that you own. I think Angelica was making this point earlier on. If you've got a successful business, it will grow, it will achieve a scale. If you exit well, or less well than you thought because you've got maybe less of the pie, you've still exited, and that's something that's very rare. And then you can always recycle that money and come back and do something else. As a book, I always recommend Purple Cow by Seth Godin. It's quite out of date now in terms of it was written. I read that when we were launching Plum Baby back in 2005, 2006. It was all about how you can become distinctive as a brand. And just recently, I was listening to Matthew Syed's Rebel Thinking.
Rebel Ideas.
Rebel Ideas, thank you. Yes, Rebel Ideas, which particularly from the perspective of diversity and difference in your team makeup is really important.
Anyone else contribute?
I might. Can I suggest a podcast? Because it's not big. Yeah. So I actually found that I'm quite tired at the end of the day. So actually reading a book, I sort of can't actually focus on the words. So I ended up listening to podcasts. I was listening to a lot of Masters of Scale and how I built this and all of this stuff. And actually, to be honest, it started to stress me out because I was like, oh my goodness, Twitter did this and I'm not doing it. And, and then I thought, actually, I can't, this is actually making it worse. So I actually discovered Stephen Bartlett's Diary of a CEO, which I really recommend because you can obviously pick the episodes you like, but it just gives you a real boost to like keep going, keep doing it, have your vision. It talks about mistakes that have been made and from a variety of people. And I've just found that actually it's been a good pick-me-up when things have been really tough. So highly recommend.
Anything else to add at all?
Yeah, I love that podcast as well. I feel like I've already given the mum test, so I'll give another one, which is, I guess, not really answering your question, but I think it is important for fundraising, even though it's not this is what SEIS is, not like a kind of non-fiction book, but do you know what I mean? It's like the book that I guess everyone might be familiar with, but that's really helped me just personally, which then in turn has helped me raise, is Atomic Habits. So getting yourself right and building your own daily habits and having that consistency and structure around your day-to-day life will help make fundraising easier. It's just something that I've got that I listen to and that I've listened back to about 3 times over the last year just to really try and cement it into my head. But yeah, it's completely kind of changed how I kind of manage my day-to-day and my habits in life, which is important for fundraising.
All right, thank you very much. I've just got a few thank yous I would like to do. So first of all, if you'll join me in thanking Nick Howe again for hosting us and his generous hospitality. I'd like to say thank you to Mashi Shams for coming along and IOD Young Executives Forum and working with us on this project. So thank you very much. And your panel, Angelica from SFC. Fundraising. Paddy Willis, so thank you very much. Food and drinks industry. And Ivan from Newable. Lara with her Improve One and changing the health service for the better. Brad for making all of these sites so much more accessible and getting deals on all the drinks from all of these lovely big brewers. So thank you, Brad. Finally, again, not least, but more importantly, from Sydney for the fantastic job she's doing, allowing people from disadvantaged communities to building careers with really big names. It's just fantastic and giving them mobility. So thank you. Now, just before we wrap up, you'll notice we have occasionally on this had the Company of Entrepreneurs logo. And I'm not going to bore you because the drinks are outside, the nibbles are outside, and I am desperate for a glass of red wine. I didn't have one beforehand. However, the Company Company of Entrepreneurs is one of the newer livery companies, been going 8 years, and it's all about supporting and encouraging entrepreneurship. So if you're an established entrepreneur, we'd love to hear from you, and come and join us if you'd like to. We do lots of fun things. Would the people who are Freemen of the Company of Entrepreneurs please put their hands up? Thank you. There's a few in the room, as you'll see. So please, if you want to learn about the Company of Entrepreneurs, and our learned clerk didn't put his hand up, he knows more about the livery movement and more about the Company of Entrepreneurs than anybody else. So put your hand up, Duncan. Thank you very much. Come and he's one of the tallest, if not the tallest guy here today, so he's not difficult to spot. So do come up and say hello and have a chat to us about the Company of Entrepreneurs and what we're doing, and perhaps some of our outreach programs that we do with various universities, etc. So, and a big thank you to all for coming. I really do appreciate that. So, round of applause for yourself. There's my email address. If you would like a copy of the slides that we've used, please do email. Happy to send them out to you. We are hoping to have a recording of this session. So again, if you want to access that, drop me an email and we'll let you know. Mark's going to get it edited for us. Fingers crossed, his son's going to be doing that. We've got a download of it anyway, so fingers crossed that'll happen. So, and I'm delighted now to say,
I think you missed one very important thank you. I think we owe you a thank you.
Oh, sure. Thank you. Other customers I am to public speaking. It's been a pleasure. So, and I look forward to saying hello over a glass of red wine, white wine, beer, whatever, or water if you don't, or orange. So thank you all very much. I look forward to catching you outside. Cheers now.